In today's rapidly changing financial landscape, can you really secure your future with smart trading strategies?
Financial experts like Nathan, Professor Steve Hanke, and Mitch Beexler join us to unpack complex market dynamics in just a few minutes.
With cutting-edge AI technology, we've distilled hours of expert interviews into concise, actionable insights that you can start using today.
Get ready to uncover their secrets on effectively managing risks and options, the looming economic shifts, the housing affordability crisis, and much more.
Welcome, Nathan, to our series on long-term options trading.
Thanks for having me, Jason. I'm excited to share my story.
Nathan, what insights can you provide about risk management in options trading?
Options trading requires a mathematical edge to manage risks effectively.
What drove your shift toward options trading after traditional stocks?
Nathan shares how diverse experiences shaped his trading philosophy.
Can you illustrate the impact of emotional decisions in trading?
Nathan explains how poor emotional control can harm trading outcomes.
What strategies do you implement to maintain confidence in your trades?
Nathan discusses outlining strategies to avoid emotional errors.
What future trends do you foresee in the options market?
Nathan stresses that disciplined risk management will be a constant in trading.
Any final advice for novice traders?
Jason concludes by reiterating the importance of a structured approach to trading.
Today, we're discussing economic forecasts with Professor Steve Hanke, an expert on monetary policy and inflation.
Professor Hanke predicts a recession probability exceeding 90% and warns of slowing earnings.
Professor Hanke believes the likelihood of a recession is over 90% this year.
He argues that earnings growth forecasts are overly optimistic, potentially heading towards zero or negative territory.
Professor Hanke emphasizes that a contracting money supply is a key driver of economic slowdown.
He connects this contraction to historical examples, suggesting it will weigh heavily on the economy this year.
Hanke discusses regime uncertainty as a significant factor affecting investment decisions.
He notes that this uncertainty can lead to hesitancy among consumers and investors, similar to the conditions during the Great Depression.
Hanke argues that tariffs create market inefficiencies, which lead to reduced benefits from international trade.
He warns.
What does Professor Hanke predict for corporate earnings?
He expects earnings growth could stagnate, with many companies likely revising guidance downward.
Hanke concludes that investors should monitor money supply changes and brace for ongoing market volatility.
He advises a cautious approach as economic conditions evolve and earnings challenges emerge.
Today, we're delving into the significant drop in consumer confidence as analyzed by Stephen Van Meter and Jeff Snyder.
Their insights reveal that the Consumer Confidence Index has reached its second lowest point on record, showcasing fears about job stability and the economy.
According to Stephen Van Meter, the decline in the Consumer Confidence Index indicates serious economic fears.
Jeff Snyder adds that the increasing fear of job loss emphasizes how consumers are interpreting economic signals negatively.
What does Stephen Van Meter say about the current job market?
Stephen suggests that as consumers sense instability in job security, this affects their spending habits significantly, resulting in increased savings.
Jeff Snyder discusses the deflationary pressures we are seeing in the economy.
According to him, with inventory levels high, manufacturers are struggling to move goods, leading them to reduce prices.
How does Stephen Van Meter connect consumer confidence to the stock market?
He indicates that as confidence declines, it often leads to a subsequent downturn in equity markets.
What future trends does Jeff Snyder foresee based on current consumer sentiments?
Jeff warns that if the current trends of declining confidence persist, we may face broader economic contractions.
In summary, Stephen advises consumers to be cautious, revising budgets to mitigate financial strain.
Jeff emphasizes that staying informed on economic trends will be crucial as we navigate these potential downturns.
Today, we're exploring insights from Mitch Beexler on the ongoing home affordability crisis in America.
Mitch discusses how many young adults are facing the harsh reality of homelessness due to skyrocketing housing costs.
Mitch asserts that home loans are now riskier than they were before the global financial crisis.
He explains that regulatory changes have removed essential consumer protections, complicating the housing landscape. Mitch emphasizes that current DTI ratios fail to incorporate inflation, putting many at risk.
He argues that these inflated ratios lead to a housing crisis unlike any seen before. Mitch highlights alarming eviction trends, particularly noting a 106% increase in Austin.
He notes that these evictions indicate a broader financial crisis affecting renters across the nation. Mitch explains that the time to save for a down payment has significantly increased.
The financial barriers for young homebuyers are escalating, making homeownership increasingly unattainable. Mitch foresees a continuing decline in housing demand due to persistent affordability issues.
He warns that many landlords could face financial ruin due to the surge in evictions.
Mitch concludes that community action is necessary to rectify the housing crisis.
He urges viewers to unite for systemic change in housing policies for lasting impact.
Today, we're diving into market insights shared by Matt from Trade Brigade about the resilience of equity markets.
Matt highlights that traders should remain cautious of falling into bearish traps as the market shows signs of strength.
What does Matt suggest about the current market dynamics?
Matt points out that recent market rallies suggest the possibility of the capitulation low being set, urging traders to consider bullish positions.
He emphasizes the need for traders to stay aware of previous resistance levels that are now acting as support.
According to Matt, the precision of recent market retests shows that buyers are stepping up where sellers previously failed.
He calls out key levels such as 523.75 that traders should monitor for potential trend reversals. What is Matt's take on trader psychology?
He suggests that excessive fear can lead to missed opportunities, urging traders to keep up a bullish perspective.
What does Matt predict for the near future?
He forecasts possible market consolidation but remains optimistic about upward movements if key levels hold.
How might news on tariffs impact the markets, per Matt's analysis?
Matt believes that positive developments in tariff negotiations can provide a significant boost to market sentiment.
In summary, what actionable insights does Matt provide?
He advises to monitor key technical levels, remain open to market changes, and avoid being overly bearish in a positive news cycle.
Furthermore, understanding market emotionality is vital for traders aiming to position themselves advantageously. Today, we're reviewing market insights from the technical traders, who discuss the current volatility in equity markets and expectations for potential recovery.
The technical traders highlight the high volatility in various asset classes, noting that indicators are mixed and market sentiment is uncertain.
The technical traders assert that current market sentiment is mixed, with traders feeling uncertain about the direction of equity markets.
They emphasize relying on technical indicators to gauge potential movements following recent downturns.
According to the technical traders, we've seen significant volatility, with equities now attempting to rally following a sharp decline.
This potential rally occurs after a steep sell-off, hinting at a cautious market recovery dependent on technical support levels.
The technical traders note gold's strong performance amid market volatility, while silver presents a mixed outlook with bearish signals.
Despite bearish patterns, silver miners have shown recovery potential, sparking interest among traders.
The technical traders recommend that traders should be cautious about opening new positions until clearer market trends emerge.
They advise against trying to pick bottoms in the market, urging investors to wait for more definitive signals before committing to trades.
The technical traders predict a potential short-term recovery in equities as markets start to stabilize.
However, they caution that long-term bearish conditions may persist if the market fails to show sustained upward momentum.
In conclusion, the technical traders emphasize that understanding current market conditions is crucial for making informed trading choices.
They advise monitoring key indicators and price movements, as current trends can unveil both opportunities and risks.
Wow, we've gathered such a diverse range of insights today.
Absolutely. From the technical trader's analysis of market volatility to Nathan's emphasis on risk management, there's so much to unpack.
It's interesting that nearly all guests agreed on the need for cautious capital management given today's financial climate.
Exactly. But just look at the differences. Mitch Beexler painting a dire picture of the housing crisis versus Professor Hanke's broader economic concerns. That's quite the divergence.
Right? And let's not forget Stephen Van Meter highlighting consumer confidence. His take on its decline clearly resonates with many of the challenges we've discussed.
True, It shows how these sentiments could significantly impact markets as we move forward.
If you found today's insights helpful, don't forget to hit that like button and subscribe.
Yes, supporting our channel helps us continue bringing you expert analyses like these.
And stay tuned for our next video where we'll explore emerging market trends and what they mean for you.